After trading the wheel strategy for about 2 years and having great success, guys, I mean, really great success. I was literally making 1% per week, wheeling TQQQ in its uptrend for a long time. But even after my 1% gains per week trading the wheel strategy, I finally decided it's time to stop trading the wheel. Many people still love this strategy online. I still think it's a great strategy. I had great success with it. But personally, for me, and I think many of you, there are actually better trading strategies out there that you should consider instead of the wheel strategy, and ones that take less time. And this is coming from a guy who is making great gains. So let's dive in why I don't trade the wheel strategy anymore, and maybe you should reconsider it as well. As usual, none of this is financial advice. I'm not a financial advisor.
Knowledge.
So let's start with the basics. If you know what the wheel strategy is, I'm going to put it in the timeline, skip ahead so you can actually get to the video. For those of you who don't know, I'm going to explain this really briefly. This is not an in-depth guide. This is just a basic idea, and I'm assuming you have some basic options knowledge on selling puts, selling calls, and buying puts and buying calls. So in a very basic sense, I have Rocket Companies, Rocket Mortgage up on my screen on Robinhood, and we're going to trade some Rocket options. This is on a Sunday, so it's all static, but this is just for idea. So we have a contract expiring December 20th, and the wheel strategy is basically you're going to sell puts to get a stock, hopefully when it falls down in price. So for example, the current stock is $12.50. If I sold a put at $12, if Rocket closes under $12, I could collect $25 in premium because I'm selling the put, and then I get to buy the stock for $12, but I also collect a little bit of income. I collect $25. And then when I get assigned, all I'm going to do is sell a call, switch to selling a call, and then I can sell a call for my strike price $12 or above the following week. So I'd go to the next week after my contract. So I sell a put, get assigned the calls eventually. If not, I just keep collecting premium. When I get assigned the share, then I'm going to switch to sell a call, get a little bit of premium as well. I could go up to $13. I could go up to $13. Then I could also collect $10 for agreeing to sell my shares for that price, and I get a little bit of extra income. So you keep doing this, selling puts, get assigned, sell a call, get your shares taken away, and you repeat this over and over again, collecting some premium. So really, what's attractive about the wheel strategy? If you want to buy a stock, you can often collect the premiums from selling puts, and then you get a discount when you finally get assigned. Again, that would be the $25 I was able to get if I sold for $12. Then when you finally own the stock, you sell the covered calls, and then you collect more premium and rinse and repeat. So in summary, what's attractive about the wheel strategy? If you want to buy a stock, you can often collect premiums for selling puts and getting a discount. And then when you finally get assigned the stock, then you can sell calls and then get more premium for owning the shares. Eventually, the share price is going to move past your call and you're forced to take profits, which might be good if the stock drops back down later because you're forced to exit your position. Or it can be disappointing if the stock continues to rise past your covered call strike price. And we find this often happens when trading the wheel strategy. If we look at something like Microsoft, let's say you're trading Microsoft and wheeling through this period, you would have probably just been better buying and holding as it was in a large uptrend during this period. You would have sold your shares when you could have just made more money, or you'd have been constantly rolling out to a later date. Now, yes, you can collect some great premiums, but a lot of the time in an uptrend, you would have just made more money if you held the stock and sold at a later date. Now, in a sideways chopping market like this, I think great for the wheel strategy, right? This is chopping, sell a call, sell puts, sell a call, sell puts, and then you can actually wheel over and over and over again. A lot of times in an uptrend, though, when you're selling calls or selling puts, it's just going to leave you behind, or you're going to sell your call, and then you're not going to get as much money if you just sold the stock at a later time. Remember, when you're selling your calls, you're limiting your upside to potential gains, and a lot of the times you're getting worse gains than just holding the stock if you're in a bullish market environment. We know this is true when we look at a covered call ETF. Let's just go to the Granddaddy QYLD when we look at the covered call ETF. Now, this is with a dividends adjusted. When I turn it off, you see the share price depreciates downward over each crash, over each time, because the share price is capped because you're selling covered call, so it only has so much room to grow. Now, the wheel strategy is not all that bad, but I don't think you can use this indiscriminately since you're capping your upside and you can miss out in large bull markets. I think it's one of the better stock option strategies, but you can't just sell puts whenever you want, having the stock drop, and then you have to sell calls, then have the stock price blow past your strike price. You can't outwheel a downtrending market or a bull trending market. You might actually get worse gains because you're limiting your upside position. Imagine getting assigned Microsoft in early 2022. You would have been able to sell any meaningful calls in this downtrending market. And then when you start selling calls, you would have been assigned, or you would have had to roll out your options so far your money's just stuck in that trade. For me, if I find a good sideways trending stock, it's great for wheeling. Rocket Mortgage was one for me for a long time. These very basic support and resistance lines made it really easy to trade. You can sell puts when it comes down to support. You had it up here, sell call, sell call, sell call. And then you can see it flipped support and resistance. And then it's coming back down to this support right here. Well, let's say you started selling puts near the top, you would have been assigned. And as we looked at our Rocket options, no way we can sell a call for anything past a couple bucks, the current price. So you're not collecting anything meaningful. You'd probably have to roll out to, like, if we go out to a month on Rocket Mortgage at the $16 strike price, at the current price, you can collect $8. So it's really not worth it at that point. You can't outwheel a downtrending market, and you can't outwheel an uptrending market. You're going to limit your upside or get assigned on a downtrending market, and then you're going to have to be forced to held, and then you can't sell any meaningful calls. But if you use some basic support and resistance lines, I think it's a great strategy just for basic trading like this, like on Rocket Mortgage. Now, knowing all of this, why did I actually stop doing the wheel strategy? On TQQQ, you can make insane gains, as I have many videos on that. You can sell puts all this way, 1% weekly gains, and collect a lot of premium. If you want to look at that video, check it out right here. I was making great gains, but honest to God, I found something a lot easier with less work and more gains. And if you've been watching my channel, you probably know what it is right here. Yes, it's just buying and holding Bitcoin. Why would I do the wheel strategy, find good trades, manage these positions, be stressed out, have to roll out, still experience large drawdowns depending on the stock? When it's dead, I could just buy and hold Bitcoin for like 2 years and get way outsized returns. These green arrows is when I really first started posting videos. And since my first arrow, it's a 300% gain. I can't do that doing the wheel strategy. It just doesn't make any sense. This is way easier to manage. Do technical analysis, sell calls, sell puts, monitor positions, or just buy Bitcoin and then just wait till like next year and sell. I'm definitely beating 1% per week gains using wheeling on TQQ, just buying, holding Bitcoin. And buying and holding has been paying off handsomely as I've over doubled my net worth in the past year, something the wheel strategy can definitely not do unless you're taking way outsized risk. So am I ever going to do the wheel strategy again? Maybe, but probably not actually the wheel strategy. I'll probably sell puts on stocks I actually want to own. And when they're towards their bottom, at least I think they're towards their bottom, and probably take some profit. I'll sell some aggressive calls, probably on like my FBTC holdings, my other Bitcoin ETF holdings. When I want to sell anyways, I might as well get some extra premium. But I wouldn't say I'm actively going to trade the wheel strategy, since there are easier ways to grow my money with less time commitment, less stress, and less headache without having to roll and look at strike prices and all this. However, if you still like the wheel strategy, that's fine. Just do your thing. You can still check out my spreadsheet of how I tracked my trades using the wheel strategy right here. God bless. Peace.